You hear me now, Norm? Fabulous. All right. As to the email I sent out on Sunday about the changes, I'm still waiting. I'm still getting email questions about that, and I'm also got to get a clarification on from Maxi before I respond to it. But I'll collate all the information, put them into an email to you, and send it out as soon as I can. So don't stress. It's all under control. Good. Yeah, Barry, I'm well, thank you. All right. So, got a question here about MACD divergence. The question is, which which divergence do you use? If you're trying to see, this divergence, you'd be looking at the histogram. You tend to look at from cycle to cycle. You're using your the lines. So here we can see from this high to this high, we've got this red line, and your red line here. There's bearish hidden divergence. But when you're looking at the end of the run, the end of the sentiment, then you're looking at the histograms. Right? So at the end of phase one, you're looking at the although this is phase two. At the end of phase one, you're looking for the histogram divergence, and you're using the signal lines from cycle to cycle. Okay. Question: are we all going to get the email? Absolutely. If you're on my email list, you receive emails from me. You will get the email. Okay. So that's with MACD histogram. End of phase one, use the histogram, and from cycle to cycle, use your signal lines. These lines here. All right. Euro pound. Yeah, I like this from a fundamental point of view. You've had a nice little cycle underneath there. Trend continuation short. Cyclicity is lower highs, lower lows. Well, you've just had a mini cycle underneath it, so lower highs, lower lows. Well, you've just had a mini cycle underneath it, so whoa, I'm getting feedback here. Just heard myself. You guys still there? Well, I'll carry on, and it's being recorded, so I'll post it up. All right. So with the euro pound, I'm seeing this little cycle. You could be looking at this in the longer term picture and say, well, we're getting this. Got this trend line here, or even that trend line. Although that's only the second touch. You can see the cyclicity here on the weekly, and therefore you're still getting lower highs, lower lows. But if you're just looking at the daily, you've got this little cycle underneath here, and that's where you could potentially look at a trade, as long as you've got all the We're back. Good. Sorry about that. Yeah, so on the longer time frame, you've got this lower highs and lower lows all the way down. But what I'm seeing here is this, try to do a cycle above it and break the downtrend. That failed. We've now got this little cycle underneath, and you can be looking at taking this short from here. So we've got this down again. Sorry guys, I'm just waiting for this Muppet to finish. It's going to carry on again. Anyway, euro pound. I like it. We've got this cycle underneath it. Need to do your analysis on it, such as Fibonacci. That may not be a strong reason to do that. We also need to get some horizontal support resistance lines in. If you come to the weekly, you might find some of that. Or even the monthly. Yeah, you see things like across here. Come back to the weekly. Might take that up a little bit. Can't move. Across there. Okay. And build your argument for the trade. So, yes, back to your analysis. Fibonacci extensions into this zone here. That'll be a good target because it's just above this horizontal support here. 1.193. Just waiting for it to this is all good. Okay. Do apologise about what's going on today. I'm not sure. There's a school carnival on. Aussie dollar. The question is going long. Higher highs and higher lows, yes. Above the moving averages, yes. Horizontal support, yes. This is close enough to lower the 10th to the 3rd. RSI convergence, yeah. Bullish price action, no. That's an inside bar. Fib retracement, no. Okay. You've got this all back to front. You've set this up as what you're looking here is a divergence. or trying to find a divergence for a phase 2 trade, and you've got this extension here. Looks like you're setting it up for a short, but your technical analysis is for a short, but you're going through your checklist of long. And do you really want to be buying it when you're starting to see the heat come out of it? Was there divergence here? There's, that's 81.9, that's 85. There's no real divergence in this move. But there's limited upside when you're already above the 80 mark. Again, just waiting for the next hit. Sorry. But this is not something you'd look to short, okay? And you're doing your technical analysis all back to front. Okay. You've set the trade up for phase 2, but you're doing a phase 1. You shouldn't be looking to buy it when it's already in the up here. Aussie yen. What's this? Can I take this trade, or is it ranging? Okay. I'm not sure. There's just a lot of fucking background noise going on here, guys. I'm sorry, it's distracting me and it's annoying me. And you've got the Fibonacci here looking for a long trade. You've got this, I'm not sure what this is. What you want to see is the divergence coming across here. I'm just going to carry on. I'm not sure why the sound's not working. It'll record it though. So we've got, for fuck's sake. This is all wrong, right? We've got this Fibonacci here. You're looking at this as the traded long. Aussie. I don't necessarily see this as range trading. When you look at it on the weekly, yeah, there is potential range trading, and it's sort of at the top end of it. If you look at this high here, this could be You've got this resistance here off the weekly. The moving average is not exactly flat, it was more flat over here. I see this is about to be have a pullback. Yeah, and your analysis here is, when you're looking for divergence, you're not looking for, I mean, this is convergence anyway. They're doing the same. And again, you've got the incorrect checklist for what you're trying to do. I'm not sure exactly what you're trying to do. You're buying at 90 or entering at 96.04. Your stop is at 94, so you're looking to go long. $93.02. What the hell is that noise? 93, 96.04. No, I'm not liking that. Don't be looking at it to go long. Yes, is that calculation too far from today's price action? Oh yeah, this it's all messed up, and this is too far out to be looking to go long. It's my estimation. All right, CAD Swiss. Trend line, higher highs, higher lows, horizontal support, weak, hard support, all-time lows, needs a break to confirm trend, change of trend. Yeah, I would say this one in terms of changing the long-term trend, but that is a significant high. Into at 88.3, stop loss. Ooh, okay, you're looking to go long. Okay. I still see this downtrend as being intact. Yeah, maybe trying to decide which way it's going to go from here. But there would have been a short trade in here somewhere if you were looking at it. And therefore your stop should be at break even or above this bar, because that's a reversal. No, it really is broke below rather than bounce. Yeah. Trend line support, bullish price action. I prefer to see a proper cycle above the moving average before I started buying into this. I'd prefer to be looking at shorting opportunities and be in this short. Yeah, CAD Swiss. Yeah, I can see. To me, this is we're still doing in the downtrend, and you should be looking for shorts. You might have been looking to get in under here, and as I said, your stop should be a break even or above this bar. If you are short, looking to go long, you need to see a proper cycle above it. Dollar yen. Fuck. Dollar yen. Higher highs and higher lows. Above the moving average. EMA support, horizontal support. Yep. RSI convergence. Bullish price action. Pivot tracement. Trend line. Resistance in the way. hidden divergence, bullish charge pattern. I'd have to agree with all of that. Although you've given fib retracement, I wouldn't give that because you're basically back where you're at. But we did make a higher high, and we do have a higher, slightly higher low. So I'm wanting to get long into the yen and be looking at this as an opportunity. We're getting in as the momentum's on the lower end. Trend lines, you can draw trend lines till the cows come home to support your trade, but if you do that one there, it links up nicely, doesn't it? So, but I wouldn't bother putting a fib on it because you're starting here, as you're not really getting fib support because it's it's back to where you started from effectively. You don't need a fib, but I'd look at starting this with maybe 1/4 or 0.5% on the trade, and taking it, adding to it on the shorter time frame once it's established. When you're done with all these emails, can you look at the Kiwi dollar? Yep. Yeah, I will. Could you build up a portfolio of trades for longer term holds in the prop account? Absolutely. Yeah, once you get something risk-free, you want to hang on to it, such as what I'm trying to do on this one. I'm looking at this maybe $1.12 or even $1.20, which is between 400 to 1,000 pips. So this one's good. I just wanted to bother with the future retracement and trend line support. I have one, as you just saw me do it. Okay. Kiwi yen. This is one I saw this morning. You could potentially be looking at. Is off the 382, or if you say, well, no, it's off that, you say the 618. RSI is not down the bottom where is the preferred position, but it's certainly not it's not up here where it's ridiculous. And again, the Kiwi yen, I think the BOJ is coming out this week, maybe tomorrow. I think Kuroda's talking. Wednesday afternoon, he's talking. So there's potential that there's, well, he's certainly not going to try and strengthen the currency. So what have we got here? Okay, so you've got your fibs in the right place this time. That's good. You've got the correct checklist. That's good. You're above the moving averages. You've got no support. You've got horizontal support. Yep. RSI convergence, bullish price action. Yes. RSI convergence. Yeah, and you could say there's bearish hidden divergence. When you're looking at hidden divergence, you're looking from this low to this low, and so therefore you're looking from that low to that low. Okay, I'm not sure what you're trying to say, if you're trying to say convergence here or hidden divergence, but with hidden divergence, you're going from that low to that low, which you've signalled, but then it's from this low to this low in RSI. Yep, so that's all good. The rest of it's good, better than the other two you sent me. Alright, so this one. Okay, so you started your fib from there and using the 302. Other one is fine. I'm not fussed. Extension levels for where your target might be. That's good. There's this line here. Not sure what you're doing there, mate, but if you're going to start your fib from there, you might as well do your divergence from there. So whether or not you go from this to that or from here to there, either way, you kind of got, you certainly got slight divergence on this one, and from this one, geez, it's minimal. I mean, what's RSI there is 40.8, and here it's 44. So yeah, you do. So no matter which low you take it from, I wouldn't go all the way back here because that's not the cycle. Yeah. Okay. Above AMA and horizontal RSI, convergence, bullish price action, trip retracement. That's fair enough. Hidden divergence, yes, we've discussed that. Double bottom pattern, retest of horizontal. Yeah, that's all good. That is all good. Yeah, as I said, the hidden divergence I'd go from where you think the cycle is, which is from here. So we're in the demo account. Can you give us a brief overview of the changes now before the email, as I'm sure there's a ton of confusion around it. So if you're in demo under the account size, then once we get over 1%, it changes to real. Yes. I'll explain it a little bit further in the email, but yeah, I thought it was pretty straightforward. Is that if you're on demo and you hit 1% profit, we'll pay you that 1% and then put you into real. Because that's what we're seeing is a lot of people start trading and they go straight into negative, and then try and fight their way back to positive. But what does, and it's costing us a shitload of money, having you guys during the learning curve losing money. So that's why the changes. And of course, the fucking audio dropped out. Excuse my French. I'm just pissed off with all this that's going on here. So yeah, if you hit 1% in a month, it might take you 3 months before you hit that 1% profit. We'll pay you that profit, and then you go on to live. And then obviously if once live and you lose, then that's real money. If you're already negative, we'll freeze that negative and put you, your losses will not be incurred, but once you get back to profit, you'll have to obviously claw back the original loss that you had. The market has been hard to get any trend running, yeah. 2 steps forward and 3 steps back. No, it's just a matter of taking the steps when they present themselves. Rather, I don't see much. I've only got one trade on so far this month. I had some trades last month that closed in this month, and it's my month looks bad so far, but I've literally only taken one trade so far this month, and we're halfway into it. Right. Kiwi yen. You're doing your feed from there. That's good. Bearish divergence, yes. Horizontal support. Well, you could go off this top here. I think that's pretty much nails where the. No. That high there, what's that give us? Yep. That's a decent support. What's that? 87.95. But yeah, this is phase 1. Looks good on daily. However, the weekly looks to be in phase 2 after making a high testing resistance from late 2007. Interesting. I don't see the high test, champ, but See it as a high test, but I do, maybe that's because of e-signal comparison to MetaTrader, but I would see this as a breakthrough and the retest of it. Yeah, one more thing. I think that was the level, and this is test breakthrough. You don't trade the break, you trade the retest, and that's the retest. That's what I'd be looking at. But good work, good analysis. How far away are you from the 1 hour entry allowance? Mate, when I get all this into bed and Easter out of the way, I'll start rewriting the manuals and doing that. Just wanted to make sure we had all this in place first. I'll give you. I do want to give you guys allowance on the 1 hour whilst you're still trading live potentially, and really blow things out of the water because the more the lower the time frames, the higher the risk, right? So, yeah. Right. Dollar yen entered rand, made a higher high, but a seller bar, no change to stop loss. The rand, yeah, no change to stop loss. It's not, they're two seller bars, so you can't really move it. I believe you stop there. Looked at dollar yen long, range reversal, long, no divergence, so yeah, I don't think it's a range reversal. I think we're trying to make higher highs. The moving averages aren't all that flat, although the 50 possibly. Yeah. Fundamentally, I want to be long this. I think the yen will continue to weaken, and it should be around 120. And I see this as trying to get up there. Then it's done another higher high, and I think that we should get another one in the next move. It may not happen, but that's my belief, both fundamentally and technically. Strong level of support, no divergence. Yeah, well, I'm not seeing it as a range reversal, but if you're seeing it as range reversal, correct, no trade. Went through all the other pairs. Kiwi yen was the only one looking good. Concerns RSI showing divergence on the Kiwi yen. 1 hour could be traded intraday and exit intraday on convert to a 4-hour management overnight, possibly. Yeah. Do I want a hand? I appreciate it, Tom, but yeah. Well, you're offering to come up to Bali and help me. Kiwi yen seeing divergence. Yeah, there's a good strong trend there. And on that sort of looking at that, you're potentially saying, well, it's this is over. You've got to get back down to the bottom of the channel. But have another look at it as last time. Look at the length of this cycle. We're only about halfway through that same length. And we're looking similar to be about here. I'm looking at that chart pattern. High highs above, yeah, soft floating of 20, yeah. I'd say more that has broken this horizontal and retesting it. That's what I'm liking. No levels of no trend line support, no. But what I really like is they've broke this and it's now retested and it's bounced off it. RSI divergence, well, this is, if you look at these lows here in RSI, this would indicate this is a bullish signal that you've got. Oh, it's not even, no, it's good. This is all convergence. It's all convergence. divergence from the 27th. Well, that's a bullish signal, yeah. So from the 27th across here, that's a bullish signal. Yeah, that's bullish hidden divergence. That's a good thing. Not sure if I've fib placement. Okay, fibs. Yep, as I said, you can. That's a reasonable place to put it. But you could also have it from there. Either one would suffice if you think that's the cycle, or if you go, well, no, this is the move, and have it from there. Either one, you're getting the fib support, one of them, either the 382 or the 618. Right, pair selection. I wanted to discuss pair selection. I think by now many of us would have realised our monthly P&L is dependent upon what trades we do take and what trades we pass on. Yeah. How can we improve our pair selections? I get the feeling that you wanted to buy into Aussie Kiwi and so looked for an entry once we had seen a cycle above the 50 EMA. Yes, rather than just scan the market daily for technical setups on the daily and take whatever pair score of 7 or 8. I know you didn't take it. I know you didn't like US dollar CAD for fundamental reasons. Guess what I'm saying is that in my experience, for every good selection I'm making, there are 2 or 3 selections that failed, and to make a profit I need to find ways to minimise lost trades and maximise wins. I'm not sure how to do that yet. For example, Aussie Kiwi might work, but I also look at Aussie Yen short, which is close to being stopped out for a loss. As for the entry, I was interested to see how you got into Aussie Kiwi, and I saw it, and it was not a typical ring low, but you placed your entry above the highs of the third, rather than the previous bar, as well as the entry bar being engulfing, which I get doesn't matter, as it was US unemployment that caused the pair to rise. Is this something we'll be looking more deeply into the boot camp? Okay. Let me just discuss this, and we'll look at the Aussie Yen, and then I'll go back to your other questions about pair selection. Entry here is I'm wanting to get this because every time it's been down to 105, it's rallied off it. If you have got the E signal, you can go back further. If you go back further, you'll see this is done 4 or 5 times. It's got down here. It's rallied off it. So I've been looking for a buying opportunity. We took this phase 2 and then got taken out of it. And now I've seen this little cycle above this 50 EMA, and it's all looking very bullish. It's breaking this downtrend, which is only a little downtrend. It's not a strong trend line. In fact, it's so strong that I'll remove it. We've got a strong horizontal here as a support, and we're seeing this little cycle above the 50 EMA. It's come back and tagged this minor trend line, but it doesn't have to be a ring low like this. Yeah, it doesn't have to be a ring low like that. Why I didn't put my order above there is because it was a seller bar, and by rights I could have put my order above there, but I think I traded this on the 4-hour in here somewhere. Yeah, I traded this on the 4-hour and got taken out, and so then I went, oh, you know what, I'll go back to the daily and wait for it to set up, and that 4-hour trade was in here. Yeah. And then I got taken out on this bar, and so when this bar finished and it was extremely bullish, I said yes, I want to be in this. It doesn't have to be a ring low, swing low, but you've got to see the buying intention, and certainly seeing that. Yeah, it sort of started okay, it'll be a little weaker, but then it bounced off the 50, the support line, the trend line, and even if you put a Fibonacci in there, you could say it bounced off one of those as well, off the 786. You can see that. I'll just go down the 4-hour. You can see how it's almost the 786. So there's many reasons to take the trade, and I went in as it made a higher high on this day here. And yeah, it's sitting there. It's not going anywhere. But this is an extreme long-term trade. That's why I'm not. Now's an engulfing bar. I'm going to leave my stop there for some time until I can get it to break even, and then I'll just hang on to this and try and ride this all the way, because I think this is a potential target area here, which is $1.12, or you're looking at somewhere around even here. There's what's that, $1.20.21, as I said, $1.20. If you look at the monthly, you might pull that back to potential targeting in there, which is $1.20, and this was also a reasonable sort of target at the $1.12. So I'm in this for the long term. Now Aussie yen. This was your entry. Your stop should be above that, and then your stop should have been above this. There's, your original risk would have been 130 pips, and you're now looking at 82 pips. And so you lost about a third of your trade if you get taken out. So you still got 2/3 of your original risk. This trading phase 2 is not as strong as trading the start of a trend. Yep. So trading against the trend is lower probability and higher risk, and that's why you don't put so much of your capital on it. All right. Now, going back into the trade selection, as you say, you're not there yet. How to minimise lost trades and maximise winners. I take into account not only just the technicals. I don't go scanning through the chart looking for trades. I do go through the charts like I did this morning and say, okay, this is where it's at. But I have a fundamental understanding of, fundamental understanding of where the economies are going and what the signs that they're showing from the Forex factory and other sort of economic indicators that things are turning the corner for certain economies, and therefore I'm wanting to get in. And that's why I've been buying the pound since June last year. And I sort of hesitated at the start of this year because they're showing some weaker signals. They had one great figure last week, but I'm going to sit on the fence for that because now it's up against major resistance at the time when we're starting to see some serious weakness coming out of the pound. If we go to the calendar. So we need to get together a set of questions to ask ourselves then. Some are scoreable, but some aren't. Will you stay in throughout phase 2 pullbacks then if in long-term Aussie Kiwi? Possibly, yeah. What? Yeah, I might, Nick, in the answer to your question, I'll try and trade it. Keep my day trade on and then trade the shorter time frame and pick entries in and out of it. You guys still there? Anyway, and it's when the technicals, I'm going through it, and it's like I'm bearish euro now, and I'm waiting for opportunities to sell the euro, and it could be the euro against the US, it could be the euro against the Aussie. It'll depend on what my view is, on the economies. So the pound, I'm sitting on the fence at the moment. The CAD, I think, is starting to get some strength. So I'm looking for opportunities to buy the CAD, which would mean selling this. Yeah. I didn't like this, the setup here, or even the setup here. because I prefer to be long CAD than short it. I think if their economy's found the bottom and their currency is weak enough to that their export industry now will start to boom, and you'll start seeing some good signals coming out of Canada, and when you start seeing those good signals, along with you know, opportunities to buy the loonie, then that's what I'm looking for. Euro, I'm looking. I'm not looking at buying opportunities because Draghi is trying to scare the shit out of the market and sell it, and so I don't want to take on Draghi. The pound could still be buying opportunities, but I'll wait to see if how the next couple of weeks of data come out. And whilst it's got this resistance, then it's not going through it, then I'm just going to leave it alone. In fact, I'm short the pound at the moment on my personal account. And this particular, the Aussie Kiwi is, as I said, I think it's going to be quite a large move, and I wanted to be a part of it. So that's where I'm trying to get to is that you might have, say, 10 trading opportunities or 10 or 20 trading opportunities in a month, but I'm only taking those. Like February or March, I think I did 5 trades. So I'm only taking those ones that that I technically agree with my fundamental view. Okay, and so that's that way I filter out those trades. And January was a shocker for me, but you have months like that. But it's about getting, if you're in a losing trade, then getting out of it straight away. Like somewhere in this dollar Swiss took this short, and you should be going, you beaut, that was a winning trade. I risked 90 pips, and my stop should be here for 50 pips. Okay, so I risked 1%, and I'm going to walk away with 0.5%, but 0.5% is better than a lost trade. And I know some people took the pound, and off here, when you saw this bar testing, failing to get through there, you should have been getting the hell out of it. The euro dollar, again, you saw this one here. You wouldn't have known that Draghi was going to say what he's going to say, but you certainly should be looking at protecting your profit by putting your stop underneath that. Or even when you did hear what he said, so, well, freak me, he wants to introduce quantitative easing and it's targeting the euro dollar as a way to push it back down to fight stagnation, even though they're not allowed to do that. They're not allowed to intervene in the currency. He's said he's going to try and fight inflation by effectively intervening in the currency. So, do you really want to take on that? No, so you should be looking to get short. Would you think of trading as like a sales calling? The more calls you make, the more chances of winning you have. It is certainly a numbers game, yeah. It's not about trying to shoot a fly with a shotgun and hope you hit it. It's more about it is a numbers game. It's not about trying to take as many as you can. It's about taking the opportunities as they arise, and know that in the sense that it's a numbers game, that over a period of time you might do 100 trades, 50 of them are going to be winners, 50 of them are going to be losers. That's the average, right? And that's the industry average, and over a long period of time, the best guys in the business do about 60%, so they'll get 60 trades right out of 100, but it's the 50 that you get right, you've got to make sure pay for the 50 that lose and then some. So therefore you've got to cut the 50 that are losing quickly and make sure that you can maximise the most out of the 50 that are winners. And that's the skill, and that's the skill you're trying to learn and trying to improve. And that's why I'm trying to get you to get into the trade at the right time and trail your stop and perhaps have targets to try and maximise the trade. Okay. Could you comment on the EuroCAD is doing in relative fundamentals? EuroCAD, yeah. And like I said, I didn't like it here. I haven't. Oh, in fact, I think I did trade it there. After Draghi, I'd be looking to short this. Yep. You've got the 50 going sideways for the last for 2 weeks. You've got this quite a reasonable support level. I think that's a long-term one. It's had quite a decent run on the monthly, so it's due for a bit of a pullback. The weekly looks like it's rolled over into and is certainly in a downtrend. Daily, it's not much of a cycle underneath, but I'd be looking to short it because I think the CAD is going to get stronger and the euro is going to get weaker. So fundamentally, I'd be looking for shorting opportunities at any possible moment on this. You took euro on your demo and made about 80 pips. Cool. That makes sense. Good. Bet you a lunch that the Aussie Kiwi doesn't make it to $1.12. Okay, mate. You're going to come up to Bali and pay for that lunch if you lose. You think it won't make $1.12? Okay. Well, put it this way: you got the Kiwi about showing a bit of weakness, but it's about 40 pips from all-time high. Well, not 40 pips. It's 88.42 is all-time high, and where's it trading at now? 86, about 200 pips, right? And then you got the Aussie, far larger current market. Okay, the Kiwis got higher interest rates, but what happens when we start raising rates? And we are a long way from the highs. And Abbott's doing his best to cut the fat out of the economy. In fact, I think he's cutting everything out of the economy. The government's not going to pay for shit. You're all on your own now. Retirement age at 70, and trust me, in 5 years' time, that'll be 75. Those who are in their 40s and 50s, like myself now, are not going to be, will never retire. By the time I get to 70, the retirement age will be 100. But then I also saw some science thing where they've managed to regenerate organs. So, by the time I get to 100, I'll be able to regenerate my own liver, heart, and have a whole new body. Right. So that'll be fun. There's always good news and bad news. Yes, there is. We'll have to hold our trades longer. Yes. Yeah, and go and live in Bali and get away from the nanny state that has become Australia. All right, guys. We're back on again tomorrow. I hope that the noise and is not as bad. There's a bit of a carnival going on here today, but we'll chat again tomorrow, and I'll try and get that all those responses to you about the email as soon as possible. All-time high in the Kiwi on e-signal is $1.49 in 1973. Fuck, I was 1 year old then. $1.49 earlier. And I'm sure the Aussie, and that was just when it must have just floated. I'm sure the Aussie was probably up there as well, but nobody considers, when you look at it in the, okay, $1.49, whatever. I seriously doubt the Kiwi's getting to $1.49. I see US strength coming, and both the currencies are going to probably struggle, but against the US, so the Kiwi ain't going that high, but the Aussie will outperform the Kiwi in the next sort of 3 or 4 years. Yeah, if you set the e-signal with the @GFT on it, you're not going to get that history. Your history will only go 6 or 7 years. But if you take the @GFT off, you can go back as far as the signal has the data, such as 1973. Yeah. Well, yeah. Okay, guys. You have a wonderful day, evening, and we'll be in touch.